How do I choose what stocks to buy and how do I buy them? Hi there, I'm Bo. I have invested over $32,000 in the stock market in the last three years. I manage my three portfolios on my own. And in this 10-minute video, I will explain how to choose stocks, how to analyze a stock quote, basic analysis, and how to actually buy a stock. First of all, how do I choose a stock? There are two approaches. One approach is by Peter Lynch. Here's his book, by the way. I love his book. The link is below in the description. He says you have to, first of all, look at the stocks of the brands you understand and know and like. Basically, if you have Netflix subscription, look up Netflix stocks. If you like to buy groceries from Costco, look up Costco stock. Just Google if a company has a stock first. By the way, some companies don't have stocks because they are not listed on the stock exchange. And listed means that the company has done IPO, initial public offering, usually to attract investments. But not all companies do that because that requires going through lots of audits, a lot of money, investment in that process. So some companies prefer to stay private for that reason. But most companies, you will find they have a stock. So just Google them. Approach number two is to choose stocks from an already vetted list, like an index, for instance. What is an index? Index is a pre-selected group of companies. It's very prestigious to be a part of an index like S&P 500 or Dow Jones or Nasdaq 100. You can't directly invest in an index itself, but you can buy individual stocks of a particular index or buy all companies in the index when you buy an ETF that replicates that index. I made a video how to buy index ETFs, by the way. Here you can click on it. So once you know what index you're interested in, for instance, S&P 500, Google the list of companies in it, or just check the link in the video description that I already attached, and simply go down the S&P 500 here and just see what companies you'd like to analyze before you buy their stock. Moving on, now that you know what, you've chosen some companies, they have the stocks. Now you want to analyze them. Why would you analyze a stock? Because you want to invest long term. You want the stock to perform well. You want to know if the company is in a healthy financial state. And usually I recommend doing a full financial analysis. So go and look at financial statements like income statement, balance sheet, cash flow at least. But I will not explain it all in this video. I will tell you though how to read a stock quote, which is the foundation of analyzing a stock. So once you go to the Google Finance and search for a stock, let's say Adobe, you will see its quote here. This right here is a ticker symbol. That's how you look up a stock, this combination of letters. You will also see an actual price of the stock, also called a quote. And if you pick different time ranges here, you will see the stock's returns within those time ranges. Adobe has returned 26% in the past year. This graph shows the volatility of the quote, how often or frequently the price goes up and down. If it goes up and down very often, it means it's a volatile, most likely growth stock. Unlike value stocks, growth stocks usually have this kind of graph and volatility. That's not bad. It just tells you that you need to be more prepared for risks and abrupt changes in prices. Let me know if you would like me to make a video on the key differences between growth and value stocks and examples of these stocks. By the way, Adobe is quite volatile, as you can see here. Also, if you look on the side here, you will see market capitalization. This tells you the total value of company stocks. See, Adobe's market cap is quite high. Another money kind of metric is PE ratio, price to earnings ratio. It's a comparison of a stock price to the company's actual earnings. And usually if the PE is too high, like over 20, 25, that means the stock is overpriced, right? So Adobe is overpriced, basically. 35, that's high. Another thing you want to be interested in is dividend yield. Dividend is an annual payment you will receive as a percentage of stock's current price. Some stocks like Adobe they don't pay dividends, but like Procter & Gamble, they do pay dividend more than 2%. That's actually a great dividend. Again, if the company doesn't pay dividends, that doesn't mean it's a bad company. Most likely it's just a growth stock. That means you will earn more in appreciation of the price rather than dividends. Without going into further financial analysis, just by reading this quote, we can say that Adobe stock is overpriced, does not pay dividends, it's volatile, but it's a growth stock. And if you choose past year, you can see that Adobe's stock price has actually been going down. There was a loss. So if I were you, I would go further and analyze full financial statements, not just the quote. But this still gives you some basis, right, to understand Adobe as a stock. before you buy it. And finally, if you have analyzed the quote and analyzed financial statements, you like the stock, you want to buy it. How do you buy it? This is the easiest part, actually. First of all, you go to your investment account on desktop or app. I open the app here. You have to find somewhere buy order. Find the trading or buying orders somewhere. Then choose the quantity. How many of these stocks do you want? And I like to choose market here. That means that the stock will be bought during market open hours, so not like at night or on the weekend. And then you slide to buy. Boom, you have bought a stock. Congrats. It is that easy. People think too much about buying stocks. This is the easiest part. Now, let me know, how do you like Adobe stock? Do you like this approach to analyzing a quote? Would you buy Adobe stock or wouldn't you? Let me know in the comments. And I will see you in the next investing video next week. Start investing. Don't wait. Bye-bye.